Keith McCullough, and welcome to another Real Conversation. I'm here with Rob Simone, and we're going to have a real life conversation about a lot of different things, not the least of which are sports, life, markets, stuff like that. We're going to even get into, we'll get into whatever CJ Wilson would like to get into. So again, for those of you that don't know who CJ is, you can look him up, you can Google him. He's two-time MLB All-Star, big-time lefty. Funny guy. He's got his own business. A lot to talk about here, CJ. Thanks for taking the time.
Yeah, thanks, Keith. I really enjoy your candid approach to talking about the markets. I think it's really funny. I see some of the people reply to you, and they're like, "Hey, you're using foul language," and you're like, "That's how it goes, man. Like, we're adults. Like, we don't have any 12-year-olds in the pit and trading corn futures. You know what I mean? So it's great."
Or in you have a racing team too. In the racing pit, does everybody talk like an Irish Catholic? I don't think so, right?
Yeah, well, I mean, let's say you have a pit stop and there's like 5 lug nuts, and you have the guns coming off. They rip the tire off. They got to put a new one on. Ooh, like, those things are hot, and if like a hot piece of metal lands on your wrist or some like sensitive, you're not going to be like, "Oh gosh, dang it!" Like, "Hi diddly ho, that's hot." You know what I mean? You're going to be like, beep. You know what I mean? So yeah, it's just, we're all men here. We're all grown ups, I guess.
Yeah,
some more than others.
I'll try to keep it clean, but that has its limits. I do want to get into that. Like that kind of an experience with how hot that is definitely. Been things like crypto in the last 3 to 4 weeks. So we'll get into that. But first, I just wanted to go back. Like, I was, Rob prepared me to an extent because you guys had a conversation prior. You and I have never had a conversation, so I'm quite looking forward to this. And just looking back at your life, man. I mean, what an accomplishment of many, many things. So many people are complacent, particularly if they make it to the highest level, as I'd like to say, either in my game or in yours. I didn't make it to the professional level of hockey. I would have loved to. I think being a lefty from California might have helped me if I was a pitcher, but I'm just a Northern Canadian guy. So maybe start with that. Like, how did you? Were you always that way? Were you always curious? Were you always like getting into new things?
Yeah, I would say that as a kid, I was one of those kids that was maybe a little bit more introverted starting. So I was a Lego builder. I was a video gamer. I was a reader. I was an artist. I like to draw and paint and do stuff like that. So I was always more like internally motivated, and I would say things like, "Oh, I'm going to get a Ferrari Testarossa one day, like Don Johnson from Miami Vice." And people would like pat me on the head like, "That's cute. Those are $100,000, right?" And I'm like, "Well, yeah, but that's just money. I'll figure it out. I might not get it when I'm 16, but eventually, right?" And so I always saw that, like, if there's people out there doing things, then other people can figure out how they've been done and then, iterate and do those same things, or even do them better and get better stuff. I'm at no point am I going to sit here and say that I wasn't either financially motivated or something like that, because I definitely was. I like nice things, and I grew up in a very modest manner, in a relatively nice area. But we weren't like the big fish in the pond by any means. I had probably the smallest house on the street, and I probably got the least amount of toys for Christmas or whatever, but we lived in a nice area. I got to go to nice schools, and my mom and dad really sacrificed a lot for that. And so I wanted to really get the most out of it. And I had this concept, maybe because I watched Top Gun as a kid, and like Goose dies, like spoiler alert. So it's like, there's real life consequences out there, and I'm going to die at some point. So I better have a really kick-ass life, because I might only get one chance depending on where you fit on the sort of religious spectrum or whatever. So I might as well just do a bunch of gnarly, amazing things. And that really, to me, was the inspiration to try a lot of stuff and fail at certain things. And I think the biggest part of that is conquering your fear. And for a lot of people, the fear is way worse than the reality. So you could be so scared of heights or sharks or, olives, like the lady on the Maury Povich show. There's a great YouTube clip on that. But it's like there's no reality to that fear. So you have to just confront things, confront yourself, assess yourself, measure up, and then just get better. And that's really what it is.
Yeah, I'd like to take a step back at some point in the conversation and talk about your parents and how your principal orientation was established. But just a little bit more on that. Like, when you look at somebody who's had over 1,200 strikeouts in the league, like, how much of that mentality, fail fast, try a lot of different things, was part of your game?
I would say a lot. I think as a pitcher, you have the advantage because you're the first mover, right? You create the action, so you can. There's going to be like you guys talk about in the markets. There's secular trends that go across the game. So right now, everyone's trying to swing for home runs. There's guys that are taking big uppercut swings and stuff like that. So I always looked at it as a geometry problem. I was going to assess the shape of the swing, and if a guy has a certain type of swing, he stands in a certain part of the box. His best swing is going to come through the zone at a certain way. So as long as I can make him take his not best swing, then the likelihood of him hitting a home run is very low. And so that as like a base method of analyzing an opponent, I think was pretty strong. And then from there, I was trying to, figure out ways that I could develop new strengths as a result of figuring out other people's weaknesses. But I would say it was more like mental first. I decided that I would look for the weakness, I would look for the hole in the swing, and then I would attack that. And I got probably more strikeouts, I would say, tricking people than I did because I threw 100 miles an hour or something like that.
Yeah, it was the first thing that I realized when I was doing my homework on you. I mean, and then one of our partners here, who is a back catcher at New Haven, he's like, well, dude, he's a lefty. If you can throw anywhere in the 90s, that's going to work. But I was looking for something faster because I'm thinking righty, and I even, like, as dumb as I can be, I didn't even know that. But again, like, if you take it back to what I do, and this is maybe partly where I wanted to go. I mean, I always talk about being proactively prepared for the market that you may have, but not getting the one that you're in, and changing. How much of the plan, proactively preparing for every single batter, every single night, like how much of that did you do just as a matter of process, and did your competitors do? Is that a given at your level?
It's not a given because some people just have more God-given ability that they can just throw the ball 100 miles an hour, and they rely on that so deep into their career that once the league starts to adjust to them, they fall off a cliff in terms of actual performance. Whereas the people like me that were maybe a little bit more of a late bloomer, like in high school, I threw 85, 86 miles an hour. I didn't really hit 94, 95 miles an hour until I was, like, I think 25 years old. So for me, I was throwing hardest when I was a 26, 27-year-old, 28, whatever. And that's really where, at that point I had enough sort of like life experience that I was, and analysis, checks that I could sort of play with better tools as I got better. So I kept sharpening my tools, just same way you guys would look at a quantitative model and say, oh, we could actually improve this because we're overweight this particular factor. So I would move around, and experiment with things. And during my practice sessions, I would try things that I couldn't do, and then I would see if I could learn it. And because there was another player that did something. But I would watch like Mariano Rivera and how he would throw his cutter to lefties. I would try to throw my two-seamer to lefties because even though he's a righty, his ball moved at a similar plane to the way my two-seam fastball moved. And even though he threw maybe 1 mile an hour harder when we were both relievers, I thought it was applicable because most lefties, when they're facing left-handed hitters, are largely breaking ball. They're not challenging a lot of lefties fastball on fastball. And so the best left-handed hitters that hit lefties the best, like Robinson Cano when he was with the Yankees, he was pretty much a dead breaking ball hitter against left-handed pitchers. So, I would throw him a lot of fastballs, and after I sort of figured that out, I would hold back some of the stuff depending on the game score because I would say, oh, well, we need, like, if we're up 6-0 and I'm winning, I'm going to not show him all my best stuff because I might need that in a game like 2 years from now when it's 2-1 in the 7th inning.
I love that. I mean, when I read The MVP Machine, are you familiar with that book? You're probably in the book. I don't recall. Do you remember that book?
No, I haven't read that.
So there's a book by Ben Lindbergh that's called The MVP Machine, and it's basically how Major League Baseball, started to take a factor-based approach, even though they didn't say it that way, but that's how we talk about it, and you just did in markets. And it was the variety of pitches that started to determine the success of the pitcher. And of course, we started bringing in different kinds of camera angles on analyzing your hands and everything like that. But to me, that was like, oh wow, that makes 100% sense. It's actually very similar to what happened to the hedge fund industry. If you were just looking at a two-factor model, picking a stock, you're like, okay, it's cheap, and I met with the management team. It's like, forget the MVP machine. You're like pre-Moneyball, dude. I mean, it's like so old wall. Whereas this nonconformist approach to baseball, basically that's the point of the book. It's like how nonconformists are changing the game, and it certainly sounds like you did.
Yeah, I would say that I was probably one of the first people that was, as a starting pitcher, was focused on spin rate and some of
Yep.
this other stuff that's sort of like completely ubiquitous now. But when I was asking about this stuff and requesting this information
Right.
in 2007, 2009, they had no idea. But I discovered, like, sort of just through experimentation, that, depending on how you hold the ball, like if you hold the ball with your thumb here versus here, it's going to move different.
Right.
And then, so, I mean, that's effectively how you throw a cutter. So then I was like, well, if I move my thumb way up here, what's going to happen? Just experimenting with stuff just to see how it would go. And I learned a lot by trying other things that I would see people do and varying my arm angle and stuff like that. But I think one of the funniest things was that I would face hitters over and over again. And I got a big compliment from one of them one time. He said, the scouting report's always wrong with you. Like, they say that you've been throwing all these two-seamers, and then all of a sudden you come out there and you're throwing split fingers. We didn't even know you had a split finger. And I'm like, this is the game, my friend. I am the captain now. You know what I mean? And it's like, because if you can learn, then you can teach yourself. And if you're willing to put in the time, then you can always dive deeper. There's always another level. Yeah. And then you sort of see that funnel. And a lot of people are living at the very top where things have already sort of broken ground and germinated. But you have to see the sort of where the roots are and where the roots take hold and where the nutrition really is for an idea or a movement or something like that. So it's really funny because there's always these people that take credit for like a magic thing. So when we traded for Cliff Lee in 2010, the press was like, oh, so did Cliff Lee teach you how to throw a cutter? And I was like, dude, I've been throwing a cutter since I was 15. Like, what are you talking about? And so I would start to just like shitpost the conversations, and they'd be like, oh, this, that. I was like, yeah, before Cliff Lee got here, I was a right-handed hitting second baseman, and he just taught me everything, And people didn't realize Cliff Lee was kind of a savant and would literally play Angry Birds and like air traffic controller on his iPad until like 40 minutes before the game, and never watched video, and just like was completely not a cerebral player in that regard. He was very physical and had like perfect mechanics, but he wasn't one of these guys that sat there for 3 hours and watched game tape the way I did, So it was like,
God. I mean, it's like, that. I mean, I'm remembering this book now because everything you're saying, and I don't want to trigger you or make you happy. I don't know what your relationship is with him or not, but Trevor Bauer, like in this book, goes into like annihilating detail. Like, I mean, like into my notebook type detail. That's why I love the book, because when I think about people that play the game at the highest level in the hedge fund industry, first of all, you're probably our age, like you're Gen X, because you've had to have screwed up enough times that what absolutely doesn't work, so that you can get into positioning and finding ways to make things work, as opposed to whining and complaining about it. Where you'll see a lot of young players in the game. That's the number one thing that you see in the hedge fund business. Somebody whose star rises because they got it, they got a 100-mile-an-hour fastball, which is generally determined by when they landed in the industry and what market wave they're riding. And then all of a sudden, wow, they can't just be playing Angry Birds. It's not, the game goes against them, and then you get, they're either gone or they survive. So there's a lot of similarity, like between pitchers and hedge fund managers, I think, much more so than I thought. How about on that? Like, when you think about, I have some of your quotes which I can read outright, but I'm sure they're going to come out of your mouth anyway. Like, when you think about lessons learned that are, they apply 100% to your baseball career that they now do to your trading career, your markets career, however you want to talk about that.
Yeah, so in 2006, I gave up a walk-off home run to Carl Everett in Seattle. I threw him what logically would have been the right pitch, which was a down and in slider following a fastball outside. So it was like the shape of the pitch, and everything was like divergent. So I had like a two-seam fastball that went this way and a slider that went this way, and those two things should have set up me for success.
Right.
But Carl Everett doesn't believe in dinosaurs. So I'm applying what should have been a rational model to a completely irrational person, which means that he's unpredictable.
Yeah.
Right? And so you have like the Elon Musk type people, who goes, it's possible we are living in a simulation. And I think it's possible to assume that the simulation has at least a percentage chance of being reality. And I'm like, this dude's not even based in reality. Like, why are people listening to this guy? You know what I mean? And like Carl Everett says, like, there's a famous quote where he's like, no, man, dinosaurs aren't real. They looked real in Jurassic Park, but they could just make those things out of like plastic or whatever. Like, those bones aren't real. And it's like, all right, this dude is not living in reality, but I gave up a walk-off home run to him. So as he's circling the bases and they're playing like Sandstorm or whatever was the song in 2006, and the stadium's rocking, you know, I'm walking off the field thinking, I just gave up a goddamn home run to a guy that doesn't believe in dinosaurs. This is a low point. This is like a real low point. And, you know, because as a, I would say, an intelligent person, you're always thinking like, oh, anybody below a certain level of intelligence should just be bullied to death. I should never lose to those people. But the thing is that there's enough randomness and I would say asymmetry or YOLO or psychology or, you know, irrationality to the markets that you have to be careful. You can never be so pot committed to a move that you don't understand how irrational some of the other actors in the game are.
Yeah.
You know? And I think for you guys, like with meme stocks, right? I mean, that's like a perfect example. You have GameStop and you have some of these other things, Hertz, whatever, that are like literally failing companies. But because there's enough information out there and there's like this nihilistic rally cry from these Reddit guys, they can sort of gang up and then they can just attack anything with like piranha teeth. And we don't really know what that next thing is going to be in that regard. And that's very much what the crypto market is, which is why I'm like, I sort of distance myself from the crypto pump and dump, like investor crowd or whatever you want to call it.
Yeah.
Because I feel like it's irrational. And so I like to be a logical person. I live a life that like, I think is pretty straightforward and like I have goals and they might be lofty goals, but it's like, if I just go this way, they'll happen. And I think that's probably very similar to trading with what you guys do, because you guys take a super logical approach, but you also say, hey, listen, we thought this was going to work out and it hasn't because everybody else is really stupid and they're going to lose all their money, but we're going to stop losing money at 2% off and we're just going to move. And I think that's the maturity that you have to have when you're looking at markets broadly.
Well, maturity is an interesting, you know, can be defined in many different ways. And I often think of it, you know, I left home to play hockey when I was 16. My maturity curve was forced upon me, right? Like whether you're going to, you know, you lose your first tooth in a fight. Okay, now we're growing up a little bit here. You know, I actually just, I'm not finished, but I just finished reading the first couple chapters of Marc Messier's memoirs. It's called No One Wins Alone. And he basically said something along the lines of what you just said, and it came right out of left field to me. I'm reading this, and you know, Marc Messier doesn't do drugs, but at this point he tried shrooms. And he's like, so I'm in Barbados, and I tried, you know, I'm with these three guys. He's like 21. He's been playing pro hockey, and he's like, so I tried, like, the people in Barbados said it was tea time, but it was shroom time. And then all of a sudden the geckos that were sleeping in this 3-bunk thing, you know, they look like attacking dinosaurs or lizards. And he had this whole shape-shifting thing where he came back from Barbados and he's like, from now on, I have a healthy respect that anybody can have a completely different perspective than what I have. And I need to play that way. And it actually, that was a defining moment for him. He went from scoring 1 goal at the pro level to scoring 50 3 years later by just assuming that when he got into games that there was nonlinearity. People don't think the way you think, right? I mean, that's. Do you think that maturity comes through experience or just, I don't know, how does that happen?
Well, like one of the things that I am a big believer in is that, and maybe it's just the way I was brought up or what I experienced through like having injuries and stuff, but like pain is probably the best teacher you can ever have.
Pain.
Because it's pain. Yeah, so when you experience like expectations and you either get let down because you fail or someone fails you or your body breaks in half or, you know, it's like you try something and it hurts really bad, you realize that's a border to like the puzzle. You know what I mean? Like you're like, okay, that's the bad result. I don't want that to happen again. So I need to maybe move to a different position. And you kind of fill in the border as you go, and then you kind of work towards the middle. And I think that whether it's being a chess player or a pitcher or a trader or a, you know, I don't know, maybe a musician or something like that, anybody that has a sort of like the ability to cause the action, right? Anybody that has the ability to cause the action and they're not just immediately reacting to what's going on, they have a chance to start the game, like in a chess sense. You could start with any of the pieces that are eligible to start. You know, you could start with the knight if you want to. It's not the best move. but people do it. And so you need to be prepared when like you're playing a 10-year-old and they just go night, night. And you're like, oh, this shit's about to get wild, you know? So it's like, and that's the same way. Because like you would play against these players in baseball that would just swing at the first pitch. And if they got on first base, steal on the first pitch, no matter what. So then you had to develop this like sort of pattern that you were analyzing them for rationality and irrationality, and you had to kind of put them in different buckets. Yeah. So you would go down the list with players and you'd say like, okay, this player thinks his way through the at-bat. This player is just up there hacking. And then sometimes you would have a situation where a player would get emotionally engaged and then he would lose his axis. And you would see them, and you see that with basketball and hockey all the time. You have a guy nudge somebody under the paint and the referees don't call anything, they don't see it, and then the guy gets wound up. So by the third period or the third quarter or something like that, that guy's literally ready to throw elbows, and then he gets a technical and they don't have him in the fourth quarter, right, or they don't have him in the third period, and then he's out, you know, and then he's on a 5-minute major for fighting or something like that, or he's ejected. And like, or a guy gets hurt because he comes completely out of his skis and he he skates himself right into the boards because he's just trying so hard to maim somebody. And I think with pitching, you get that same thing. I think football, you get that same thing. And you get this like rage. And as a race car driver or anything else, they actually, with race cars, they call it red mist. And when you get the red mist, that's when you just go full caveman and you have no concept of like the actual reality anymore, because you're just like, I'm going to put him in the wall. And it just doesn't like, it's just not, that's not how you win long term. The strategic people win more often because they take a step back and they also, they know that there is going to be some sort of pain along the way, that they're going to try something, it's not going to work, they got to adapt it. And, you know, with baseball, when you're pitching to somebody, generally speaking, the hole in the swing is right next to the strength. So if you can miss, you want to miss in like a direction that goes towards the hole, not towards the strength. And it's the same thing with, I mean, I guess like with a goalie, you're going to say that this guy has tendencies, he's better with one side of his body or the other. So I, you know, based on how I swing the stick, I'm going to probably try to aim at this quadrant, depending on where you're at. But you know, you can set things up so that you have everybody kind of looking one way, and then you kind of, you know, circumvent all that over here. I think that's always been my strategy.
Yeah, that, I mean, I'd say you had a fractal approach. Like, so if in summarizing, at least the first 20 minutes of meeting you, you know, a lot of people think on a linear basis, use deterministic models, A equals B, if then, but in reality, you know, both life and markets and your professional life is nonlinear, but you do have a multiple, you have, they call them similar sets. And there's fractal patterns that are born out of that. And they're far greater and more powerful if used effectively than the human linear, I learned this in business school, valuations, stock picking thing. It's like that's, I mean, it's a really powerful thing. I do think that it takes people some experience at the professional level, then some success, some pain, like you said. But again, the ability to constantly evolve, which is very clearly, you know, what you have. You've watched the macro. I think I mean, you're a subscriber to Hedgeye, which is cool. I appreciate. I sincerely appreciate that. So thanks for you know, saying what you said about that. What kind of coaching advice would you give me? Sometimes, I mean, I struggle with this, right? I'm trying to. It's like being a player coach, and you know, I struggle. You know, I struggle coaching at the lowest level, getting them, you know, halfway there maybe. Like, what do you think?
You're saying like in terms of, well, one thing that's interesting about your process and what you guys do is you have specialists, obviously, that do different desks within Hedgeye, right? So you have different guys that have maybe more of a quadrant approach to, or a sector approach to, obviously like Rob does REITs, and then you have other guys that are going to do different things. The hardest thing to do is take the ego out of it to say, what's my real evaluation and what are my real strengths? And am I better off supplementing those strengths with another player that has strengths in a different area and working together with like a really good information flow and trust? Or am I better off trying to do everything myself? And that's really the difference between, I think, like a successful team and successful players that just can't get shit together. And I think that's where you guys come across as providing a lot of information. And so I think it's up to the individual investor to say, okay, am I going to be on the ball with every real-time alert? Am I going to look at the trends and sort of try to see what speaks to me? But I think if people are in too big of a rush You know, that's like the worst thing you can do in markets, is just kind of cannonball into the deep end because they get one piece of information. Because you always have to have the perspective, you know, of like, and that's why it's funny, because I know you've obviously talked to Sailor and all this other stuff. All your models are broken, Keith. It breaks all your models.
That's pretty good.
but the thing is that, like, you know, you have to. He's obviously not a wide macro investor. He probably doesn't have 15 stocks that he's looking at, and he's constantly rotating a 15 stock position portfolio with different stocks all the time. I mean, he's obviously a big time Bitcoin person, and for me, like, I would say that it takes time of specializing in one thing. You have to master one thing before you can ever really learn another thing. And if you're not good enough at that one thing, then you're only ever going to have a broad vision, and you're going to really need a lot more people, or, you know, to make a lot of good decisions sequentially. Because it's very challenging. There's so many stocks. There's so many factors. There's so many. It's like climate change, right? You have volcanoes, you have lightning, you have wind, you have, you know, solar flares, tsunamis, earthquakes. There's all these other things that aren't like in the sort of climate change model, which is to say, oh, well, there's this much CO2, but that's like not just the only factor, you know. And so I think people that oversimplify things end up shooting themselves in the foot, because they don't actually learn. You know, they hold a fixed position, and that's it. And you can never get them off that stool, and they won't even look around. You know, and that's very dangerous, because the game adjusts to you. If everybody and all the fund managers are doing this one particular thing, and they're doing this one particular trade, and they found this one contango loophole, eventually everybody else figures that out, and then there's no alpha in that anymore, right? So I think having new information comes from realizing that you want to be ahead, which is sort of ego driven, but then also dropping the ego to say that I don't know everything. And then having those two things kind of at battle is hard. And so just being patient and teaching people to be patient with themselves, and just force them to focus on learning and improving, not necessarily being perfect.
Yeah, and we'll get into crypto right away on that. You know, that's, again, exactly how I think about crypto. I think it's a wonderful idea. It's fractal in nature. There's a lot of things associated with the freedom. I'm again, no secret that I'm a bit of a libertarian, if you will. But again, I try to check my principles, how I think about my life at the door relative to, what I do. Like, I risk manage assets. So, as you know, we use, and it's not that complicated. Like when Sailor told me that my models are going to be broke, or whatever you said, destroyed. I mean, it's like, dude. Looking at the cost basis where you put that up for, like you said, the guy who doesn't believe in dinosaurs, that to me, like, he doesn't know where the range of that pitch is. He has no idea. And it's not being critical of him. I was actually just trying to help him think differently about how somebody who doesn't want to hodl anything. Like, I don't want to, I love steak, but I don't want to hodl cattle futures for the rest of my life. Like, it's like, I'll buy anything, and risk managing it within my process is, that's what I was trying to contribute to that discussion. It's a totally different perspective. How do you think about hodling versus trading Bitcoin?
I think that's a really nuanced discussion. That what happens is a lot of people have a knee-jerk reaction when you criticize hodling, or or traders get criticized for trading, right? I think you have to know your strengths, right? Like, I'm a trader, so I'm always looking for ways to play some sort of an arbitrage game, or some sort of like a tail trade, or like a swing trade. And I went into like this whole, like, that's how I really discovered Bitcoin, and how I really got into it was because I like trading. And it was like, oh my God, it's a 24/7 market. It never stops. I could be a degenerate insomniac at 3 a.m. and trade, and like I don't sleep. So this is great. I can have a fourth job now, and I can just trade Bitcoin from 10 p.m. to 5 a.m. and then my whole family's asleep. This is great. No one's gonna bother me. I can just do my thing. And I got into it like that. And then I discovered a little bit more of the principle-based ideas behind Bitcoin, right? Like, we're talking about maybe the more hodler mindset sort of set in. But I think, for me, my goal is just to get more Bitcoin however I can, right? Now, I would say that within the Bitcoin ecosystem, I limit it there. Because when I first started, I was like, oh my gosh, it's a salad bar. There's all these different things. I can pick up all these different altcoins, and some of them just flip 10% in a day, or 50% in a month, or whatever. But then I got to the point where I realized that by giving those altcoins oxygen, which basically by trading them and creating a market or whatever, that I was actually helping projects that I didn't believe in. And
Right.
this is where it gets a little bit into the GameStop thing, because then you realize that if you're not participating in either shorting GameStop or longing GameStop, then you're not giving it any oxygen. And if you think that it's degeneracy to play that game because it's an ethical thing or whatever, then you can avoid playing that game.
Mm-hmm.
There's enough sort of like amplitude in Bitcoin itself. So to use an example, and I already got taxed on this, so I don't care if I talk about it, but just as a specific example, I sold a Ferrari to a guy and he paid me in cryptocurrency, right? And so the cost basis on the Ferrari for me was X, and I sold it to him at a premium because it's a Ferrari and he wanted it. So he paid me more than I paid for the car. So then I took a big portion of that position and bought Bitcoin when Bitcoin was like 29 last year. Mm-hmm. So Bitcoin goes to 58. And like, I probably should have sold a majority of that Bitcoin that I bought because it was like just the process,
right.
of taking profit, but I didn't. And because I didn't, when ironically the guy called me and wanted to like buy the car back, he was like, hey, I'll sell the car now if you want to buy it back. And I was like, okay. I bought it back with Bitcoin and then sold it to somebody else for dollars, and then took that alpha and then bought more Bitcoin and then sold some Bitcoin when Bitcoin went back up again, because then I my cost basis for the car, Bitcoin was basically like at 50 or something like that. So I ended up getting a couple Bitcoin out of the trade net of the whole thing. Mm-hmm. You know what I mean? So I looked at that as like, wow, well, if I was just going to do high frequency trading like I was doing in 2019 and 2020, with Bitcoin, then it would have been very hard for me to make that much Bitcoin at Bitcoin's today prices.
Right.
So it's like I ended up making probably more using that trade than I did, in another way. And I would say it's relatively low effort. So for me as a trader, I would say I'm looking for those options all the time, because Bitcoin, it's like a foreign currency exchange arbitrage where you can buy Swiss real estate and sell it for euros.
No, I did totally get it. Yeah, it's like it's a very I've heard not so many people, I should say, explain their crypto strategy that way. You're quite willing to take custody of coins, just like you'd take custody of a chalet in the Swiss Alps. And if you can make money on it, you're going to do it. But it's because you have it sounds like you have an underlying belief. Doesn't sound like he has an underlying belief of the actual asset, right?
Actually,
as opposed to just trading it. Like I would never do what he did, but maybe in the future I will, because he just explained how he did it. That sounded pretty straightforward.
Yeah, I actually think that's a really great thing to talk about. So like one of the things that I do, and CJ, I'm sure you'll appreciate this to some degree, is like thinking about the physical Bitcoin and the paper Bitcoin as two separate entities. So it's possible to take ownership, take custody of the physical, but then use these like kind of, I don't want to call them subpar, but paper Bitcoin derivatives to risk manage. So you can own the physical, go short the paper. And I think that like one of the things that's lost in something that might be new to the space is just how important taking physical custody can be and how that's different than GBTC, for example. So I don't know. I know that's important to you. Maybe you could talk about your thoughts around that a little bit.
Yeah, so I mean, in terms of my commitment level, I literally just wrote a book about Bitcoin to give to people in Washington, D.C., because I started a nonprofit to educate senators in Congress. So it's called Bitcoin and the American Dream, not to shill it, but just to explain that, like, in terms of the depth of how much I care about it is deep, So my look at it is that because there is a limited amount, anytime you can take physical possession, which effectively is virtual because it's you have a signing device, which is like a drive or whatever. It's yours and no one can repo it from you, right? So if you have which for some people, I think when Bitcoin started was a little bit different, because each wave of Bitcoin, because it's traded 24/7, so people kind of get burned out and new narratives arise and stuff like that. It's been 13 years. The first people were very much like the first Bitcoin caveman. They were like mining Bitcoin, and they didn't really know what to spend it on, but they were doing it from like a political standpoint to say like, oh, we think that, Janet Yellen sucks and Bernanke's a bozo, and like the Fed is going to blow everything up in the world, and we're going to print to infinity and everyone's going to go broke. So like, let's take possession of Bitcoin, because at least between our little network, whatever that was at the time, 1,000, 2,000 people, like we have something that's valuable and we value each other, so we can actually like transact. And then I think it developed as like the price discovery started happening. So once Bitcoin went to $1, then it went to $100, then it went to $1,000, and you have like all these different waves of people piling in. Whereas like I piled in after having been a gold bug, and as a gold bug, in the sort of 2007, 2008, I saw the equity markets being completely overvalued, and my mom was a realtor, so I was like, this is crazy. We have like waitresses putting deposits down on like 3 condos. Like, this is a disaster waiting to happen. Like, who's going to rent these places? Who's going to live there? It's a mess, and there's new construction everywhere. This is all going to be a sham. So I pulled everything out of the equity markets at that point, and I just was like, I'm just going to sit here and do nothing. And like the wealth manager guy that I had at the time was like, you're an idiot. This is stupid. Like
the wealth manager guy.
Swear to God. So I fired him. I fired this guy from SunTrust. I had a guy from SunTrust, and I canned him because I was like, I'm not going to listen to you. Like, why would I listen to you? Like, yeah. I was like, no. Like, I'm gonna gold bug out. I'm gonna buy bullets. I'm gonna buy guns. I lived in Texas, right? And this has to be said that like
lived in Texas in 2011.
Yeah, so I lived in Texas, right? And it's like, we have George W. Bush, who's like Mr. Texas and all that stuff. He's the president. And then all of a sudden they're like, oh man, we're gonna have a Democrat. Like, the world's gonna burn. You got to get a bag and get ready to leave. We're gonna secede from the union and all this stuff. And that was the time when I just started making money. So I had a chance to really take like actual physical possession of like gold eagle coins.
Right.
Yeah.
Like, 1 ounce coins. And I was like, wait, I can just buy these things like cash, and then because they're U.S. currency. I had this whole libertarian kind of idea, and Bitcoin did not exist yet, right? So this was like the hardest money I had was literally silver bullion and gold coins or whatever.
Yeah.
And I had them in a vault, and that was what it was. And the equity markets blow up, the global financial crisis happens, and everyone's like, oh my God, my stock portfolio is down 40%. I'm like, dude, I haven't had stocks for like 8 months, but I got gold, you know what I mean? And it was like really funny. It was really funny playing for the Texas Rangers while this is happening.
Yeah.
I have a fixed salary, right? So at the time it was very weird and that's really where I realized how money can be broken. Money itself can be broken.
Mm-hmm.
The money system and the Federal Reserve and all this stuff can be asymmetrically punishing to people, because my fixed salary kept rising every year. And so so my buying power was shooting through the roof, and everyone else was like becoming destitute. So I saw that sort of like people that had a high percentage of their wealth in the market versus high percentage of their wealth in hard assets, that they had divergent experiences at that point. And so I really always became a hard asset guy at that point. So when the gold kind of topped out at 1,800 or 1,900 or whatever, and Peter Schiff was like, doing one-arm push-ups in Cancun or something, he was so excited. I sold like 70 or 80% of my gold portfolio, and I exited. I exited at the top, and I was like, okay, that's good. I bought it at 800. I sold it at 1,800. Like, that's plenty for me. And, I did what any other 30-year-old Major League Baseball player would do at that point. I bought myself a nice black Ferrari. And,
which also appreciated in value.
Yeah, and actually it was funny because I put 10,000 miles on it, and because I bought it at the bottom of the market, I bought that and I bought a Carrera GT. So it was like, I was like, well, they're never going to make these types of cars again. So those cars went up in value, and I sold them, and I was like, I should be a car dealer. And that was like when the whole car dealer thing kind of came up, sort of during 2008, 2009.
So it was all through doing. Oh, and by the way, right after you sold your gold, you signed a $77.5 million contract with Anaheim. It's like, so you just kept pushing it. Part of that is that's the beauty of markets, is that age doesn't slow you down.
Right.
Neurologically, it's proven that some would say that I've already lost it, but at the age of 71 or 2, men start to lose their shit, right? I mean, so, and it's just not as easy as it is. But in your 40s, 50s, when you have a pile to play with, and you can flip it around, like I call it a go anywhere investing strategy. It's not flipping like this. I mean, it's actually the way you've thought about this, man, is phenomenal. I mean, it's intuitive. And you're not just sitting there, hodling something like gold. But gold, I own all the gold that I've ever bought physically. I have all my coins. I'm not telling anyone where they are in my house. I have all, not all.
You just doxed yourself. They're in your house. You just doxed yourself. Get a new house. You got to move, Keith.
But I'll trade paper gold, which is GLD. And this is what you just said, right? I mean, this is how I think of Bitcoin. And that's just for me, right?
Yep.
I don't have to, and maybe during this most recent crash, I can start to adapt like I did in 2007 and 8, and start thinking about actually, like you did, which is taking custody in at a price, right? I mean, you're not going to take I don't think it's prudent to take custody at $68,000 Bitcoin in hindsight because my process said not to do that, right?
Sure.
So what do you say to the people that are taking? I mean, both of you, you mine it like Rob does, don't you?
In a bigger scale, he does it in a bigger scale than I do.
Well, you didn't. We didn't pay Simone $77.5 million. All right, so he plays at a different scale. But that's the thing about gold, whether it be physical and coins, instead of taking on. Like I remember at my golf club when I was telling one of the guys in 2010 how good it's been to be long that, like you said, instead of stocks. He took delivery on gold, and then he comes the next weekend. He's like, "Shit, man, you see how heavy that stuff is?" I'm like, "Well, how much you buy?" And he's like, "Well, the Brinks truck showed up, and he bought like bars of gold, right?"
Yeah.
Like that's not for your wife to pick up, just like the mail, dude.
Well, yeah, and that, I think that's really the value play when you're explaining not just our market here in America, but the world market for Bitcoin.
Yeah.
Because you have people that are fleeing authoritarian dictatorship countries. You can't really flee with a kilo of gold and get through a border in Yemen or Pakistan or Singapore or something like that, right? So a lot of these, Singapore people will be going to Singapore, but maybe from Hong Kong to be trying to leave Hong Kong, and CCP is going to be like, haha, nice try. So you're going to the camp. We're going to send you to the camp, and I think that 4 billion or 5 billion people live under fairly shitty circumstances, that's the reality. So we have a use case for Bitcoin, which is the sort of use case for investing and making more money and having a higher quality of life. For them, it's preserving their life, and that's like a completely different thing. So you have somebody that might have, in anywhere they're having these currency meltdowns, Lebanon, Turkey, Zimbabwe, any of these other places like that, where the central banks are basically, completely corrupt and idiotic and have bad policies. So, we have a luxury here of having, floors, not having random bugs crawling in and out of our house and stuff like that, not having Gestapo squads coming kicking our doors down because we tweeted something against the premier, or whatever. So I think we have to sort of look at it from that lens, because Bitcoin, once again, having a fixed amount, there's only a fixed amount of it. Any of it that you can take is good. Yeah. That being said, someone like me that's very deep into Bitcoin, that is interacting with people the same way you be interacting with, in that example, you're meeting management teams and stuff like that. So I meet people from exchanges, I meet people from mining companies, I meet people, all this other stuff. So I have a little bit more of a feel for that. I would be the Bitcoin desk guy, right? Mm-hmm. But it's if you ask me what's going on with Solana, I'd be like, it's a scam. Chamath is a scammer, and it's not at his line. So screw that guy, whatever. So
dude, this guy's a baseball player. He's covered the bases. He's already hit shit. He's already hit Schiff. He's already hit Sailor. Chamath. He's got my buddy Chamath not. It's that's awesome. And but back to your point, that's how you and Simone actually met. Was that you were in Twitter Spaces on your desk, so to speak?
Right. So there's the Bitcoin space or whatever is hosted by a guy that they have these sort of Socratic dialogues where the people get up on the stage and they have the sort of conversation like we're having, and they might have a topic that they put out there. And someone, because I would say this is the problem with Bitcoin to a degree, is the sort of energy sometimes gets a little bit too frat guy-ish and gets a little too hot. And so you lose that sort of cool-headed logic. And so I'm in all these group chats and stuff like that. And I said yesterday, because someone was like, oh, this debate was awesome. These guys were yelling at each other. And I'm like, what is that accomplishing? People yelling at each other? That's not doing anything. People want to jibber jabber all they want. But either build something or write something that people can use as a sort of evergreen piece of material. And I think that's where I think this is very important. You don't have to be a Bitcoin maximalist. You know what Bitcoin is to a degree, and you're willing to acknowledge that Bitcoin is a potential solution for certain problems in the market. Also, because of the volatility and because of let's say you guys have this product where you sort of analyze, hey, what's happening? And whatever you got tools you guys are using to use that, people can use bearishness indicators to say, cool, I need to go sell some stuff for dollars and get ready, because if Bitcoin does dip, I want to go in heavy on the dip. Mm-hmm. And I think that's sort of how I do it. And I view it as dips are great times. They're awesome times to buy. And it's just like buy on red. You talk about it nonstop. All the things, you always say like, don't FOMO, don't chase, don't do this, wait. It'll come back down, buy it on the dip. Like I wanted to buy some Apple stock, so I set it in a limit buy. I didn't market buy Apple stock like 2 weeks ago. I'm like, you know what? Everything's overheated right now. Like if it comes down to 157 or something like that, because it was like a 176. So like I feel like, okay, if I buy it there, I'm better off than if I buy it at 176, And it's just like taking that mature approach to say, just because I want something to happen and I'm emotionally driven in the moment, it doesn't actually mean it's the right thing to do. So you always have to have that logical filter, like you guys talk about fractal approach, the quantitative approach, and Bitcoin's the same thing. It's all that. It's literally just math. And if you can get it at any way at a cheaper price than it is on sale today, then that's good, because the long-term chart is up and to the right. And if you're like me and I'm 41, I want to be able to hand a legacy amount of money off to my kids so that they can afford to go to Yale or something like that, one of these like really bougie Ivy League schools where people play hockey. I want to be able to, actually be able to afford that, because, things like college, like obviously I'm a car dealer now, so I do make pretty good money. And that's another thing that needs to be said, whereas like I have an income. Yeah. So it's like Bitcoin is not my only income. Now, that being said, with the mining business that I started recently, if I continue to grow the mining business, eventually that portfolio and maybe even the business itself will be easier to sell to a big mining company like a Riot or a Marathon or a Core or whatever, because they're always looking for stuff that's already plugged in, because it's just like any other publicly traded company, you need to buy revenue. So the goal there is like, okay, maybe I can take this company public, and do it that way. So that's kind of like, and that's, I can do that on the side, because the nature of Bitcoin is that it's, with Bitcoin mining, if you just continually accumulate and you reinvest properly and use asset allocation properly with the actual machines and the placement of the machines and how much you're paying for electricity, it's a fairly straightforward process. It's not easy, it's not simple, it's not like get rich quick, but if you can grow a savings account, you and I we all know that the dollars in your savings account are buying you less hamburgers than they bought you 5 years ago, and they're buying you less, BMWs than they bought you 5 years ago or whatever. And I think that so if you want to have a quality of life, you have to have some sort of appreciating asset that you kind of like a pile of appreciating assets. And I think that's where on a personal level, it makes sense to hodl certain things. But like some of my cost basis for Bitcoin, like I started buying Bitcoin in 2018. So it's like, it crashed all the way down and it didn't bottom to zero. And I was like, wait, why didn't it bottom? If it was a scam, it would have bottomed out. It would have gone to zero. And so that's really where I did the deep dives and I started learning more about it. And that's when I kind of committed, was 2018, 2019 is when I got, like, I would say really invested in it from an emotional standpoint. But it was like the knowledge came first from just taking everything in. And there's so much material, because as more people get in, more people decide to be content producers. So you can kind of binge watch the first 10 years of Bitcoin a lot easier now. But 5, 6, 7 years ago, there wasn't the amount of content, there wasn't the amount of brain power. You had way more sketchy people as a percentage, or like people that maybe couldn't articulate the use case, So it's like more mainstream people are in now. So the more mainstream people have different lenses. They're like, oh, remember the gold trade in 2009, 2010? It's kind of like that because of this. And then it's like, oh, hey, Yellen's back in office, hitting the P, control P. So here we go. It just is what it is.
Yeah, explaining it in terms of, first of all, when you get into this phase of your life and you're looking for, stores of value, these gold, neither gold nor Bitcoin has a dividend in terms of like the actual thing, and you just have to know where you want to buy it. So knowing where you want to buy it, and I appreciate that. Not everybody appreciates that. Like a hurricane's coming, quad 4. Shit hits the fan in Bitcoin in quad 4. If you really like it, like you said, buy a pile after quad 4 has come through. It's not unlike I bought Bahamian real estate after the biggest hurricane they've ever seen. I mean, so it's like, I always love the Bahamas, but I love buying in the Bahamas when there are no homes in the Bahamas because the hurricane took them out, right? So it's a very I think we're speaking the same language, actually, and Rob's got better language on Bitcoin in particular.
No, well, CJ, I think maybe one more before. We have a ton of questions in the queue, so definitely want to give folks a chance to ask them. But the book that you guys wrote, you mentioned it before, but I've actually found that many Bitcoiners like yourself, despite the reputation on Twitter, are actually pretty welcoming. And I know you and and some other Bitcoiners like Jimmy Song made an effort on the Hill to try to reach out to staffers and kind of get them smart on the subject. So I don't know, maybe you could talk about that a little bit. It's part of your story, so.
Yeah, I would say that like through literally going on Clubhouse and Twitter Spaces, meeting a lot of these other Bitcoin people and going to these conferences and stuff like that. I've been going to Bitcoin conferences for probably 4 years now. You meet people that are like-minded, and then you decide, hey, maybe there's something we should do about this. And I think with Bitcoin, there's very few people that have spent like 100 or 200 hours like reading and learning and watching things, whatever, that don't get it at some point. And so we feel like it's a sort of inevitability that because of the limited supply and because of the security aspect of it, that it should be something that America as a country adopts and makes it welcoming to make America the best place to be a Bitcoiner. Because you don't want really, really, really wealthy people fleeing to foreign countries where they can potentially fund really random things going on somewhere else. You want all that really random positivity to happen here. Because the next round of like really big venture capital is going to come from really wealthy Bitcoin people, 4, 5, 6 years from now, when the another halvening hits. If Bitcoin hits 100 or 250 grand or something like that in the near future, then the wealth that's going to actually come into other markets as a result of people having Bitcoin success is going to be very high, and you want that here. So making that sort of really plain, really straightforward, answering a lot of questions, being available, and not having an overly aloof perspective on it, I think has been very positive. And we've had a lot of conversations with senators and congressmen and stuff like that in their offices. I actually have a Zoom call this actually Friday with the House Financial Committee. Oh, wow. So awesome. Yeah, so we've been meeting with these senators and stuff. They're very receptive. I was one of the people that like was part of this conglomerate of Bitcoin people that orange pilled Ted Cruz, and then like during the infrastructure bill, it just happened to happen at the same time where we had this thing scheduled with him for like 6 to 8 weeks. And, then the infrastructure bill got launched like on a Tuesday or something like that. We talked to him on a Thursday, and it was like a huge deal. And then he like threw a flag up right away because he saw it. It was like something snapped. He got it. Wow. And so then him and Cynthia Lummis and some of these other senators started, making really big conversations about it. So it took traction, but then we put together some mature, high brain power people. Like we have a Wharton professor and some other people that are on our board, and we formed like a nonprofit to just literally go out there and just talk to these people and try to make ourselves available, because it is a massive topic of conversation. Yeah. So we wanted to be like a source of information, I guess, a valid source of information. And like, I think the very unique thing for me, and this is like what I want to qualify it as, to say like, I was obviously very successful before I ever got into Bitcoin with 2 different things. I was a baseball player, 3 different things. I was a baseball player, and I was a race car team owner guy that had won a couple championships, and a car dealer that had won all these awards and was making decent money being a car dealer before I ever got into Bitcoin. Yeah. So I didn't Bitcoin didn't make me, right? But Bitcoin will definitely get me to the next level. And I think that's something to say that, hey, I did this with open eyes. I wasn't like some crazy computer programmer guy that like lives on Cheetos and Mountain Dew in the basement, because that's like the way a lot of people think of the initial element.
That's true.
But there's nothing wrong with Cheetos and Mountain Dew. Yeah, I got 4 kids; they chow on that stuff. They think differently, as you said. But it's also I'm assuming it's not ironic that you orange pilled Ted Cruz. You're a Texas Ranger. He's obviously Tejas, but he's a Republican, and now you have like actually, and sadly, a political divide developing on Bitcoin. I mean, are you kidding me?
Yeah, so I would say that, one of the people that helps advise us is somebody that has been working in DC for a really long time, and I don't want to out him, so I'm not going to say what his name is, but he's a very big deal. And he's gotten us meetings with very big deal people, like very big deal politicians. And, right now, because the Democrats are, have the House, they're busy pushing the Democratic agenda because that's literally their job right now. Whereas the Republicans are very skeptical of the Democratic agenda, and so therefore they're sort of waiting for things to just fall apart, or waiting for things to fall flat, or waiting for things to not happen, or waiting for chocolate chip ice cream, or whatever is going on. So the Republicans are very open to having
waiting for some insider trading tips.
Long, go long. So the thing is, that like you have a so the Republicans effectively are open to listening, and because Bitcoin represents a sort of fiscal responsibility in a way, because you can't just go print more, you can't just go make more. So the guys that are still like Rand Paul and people like that I've always been a big fan of, or Ron Paul. Like Ron Paul spoke at the Bitcoin conference, and they couldn't get him off the stage. Like he was talking, he just wanted to keep going. He loves Bitcoin.
It was awesome. Yeah, he just kept going.
Yeah. So it's like, you have some very smart people in it that see it for like this freedom aspect. Then you have it's like the parable of the blind man and the elephant. You have like 5 blind men and they're all touching an elephant, but because like one guy touches the tusk and he's like, oh, this is a tree, and someone else touches like the tail and he's like, oh, this is a vine. And so, like they don't see the whole picture, right? So you have to kind of share the information. And Bitcoin is, I like to say it's like an octopus. So it takes a lot of different analysts. But if you can grip onto one part of it, then that allows you to sort of hang on to it long enough to learn the rest of it. And I think that's the important part.
Yeah, unfortunately, we only have 5 minutes left, and this is the only day that I have a hard stop. Otherwise, I'd just talk to you all afternoon. I wouldn't care. I mean, we could, but this central market planning committee is at 2:00 today. They got to tell us, how the world's supposed to go. So I do actually have to read and react to that, just because people depend on that. But we do have 5 minutes left for some questions.
Yeah, definitely. I'll try to get as many in as possible. Lots of baseball questions. So Scott from Anaheim. Hey, CJ, are you a regular viewer of the Macro Show? Kind of already answered that. What other products do you use and how do you use them? Finally, any opinion on the current Angels pitching staff?
The Angels need to spend, and they need to get more academy presence in Latin America. Without academy presence in Latin America and being aggressive with Latin American signings, they're never going to be good, because you need to have Dominican, Venezuelan, Mexican, Puerto Rican. You need to have arms from the Spanish-speaking countries, because at the end of the day, they're signing with other teams, and it's a competitive disadvantage. The Angels have been missing the boat on that for 15 years.
And I think the question had to do with products that aren't Hedgeye products, financial products, right? Like,
yeah.
What do you read? Like, do you subscribe to anything else?
I'm a Glassnode user, so I go on Glassnode and I read a lot of the on-chain analytics for Bitcoin-related stuff. But I think I get a good enough look at Hedgeye to get enough coverage on the broad equities market and the broad macro that I don't really need to go that many more places. I have a real job, so I can't trade nonstop.
We're subscribers to Glassnode as well.
Yeah,
I mean, I do think that analytics on it, like for us to integrate their analytics and all the data out there, CJ, that's for us. That's the next 3 to 5 years. Like that's going to be, beefing that up. There's a tremendous amount of value out there that those firms like that are creating.
Okay, next one from Rich. CJ, who was the funniest teammate you ever played with?
Adrian Beltre and Mark DeRosa. The two
great.
Funniest guys. Yeah, Adrian Beltre, because he's got this thing, if you touched his head, he would freak out. So you would go behind him and like touch his head and then run away. So highlight, during the ALCS celebration in 2011, I did a drive-by on him. I sprinted behind him and tapped his head, and he instantly turned around and punched the first guy he saw, which was Derek Holland. And he punched him like right in the chest or whatever, and it was funny, and I'll never forget that. It was a highlight of my career.
That's hilarious.
That's great.
Okay, from Rich. CJ, would you ever return to coach or have a part in MLB at some point? Are there any similarities between crypto and how athletes are perceived?
Yeah, there's a finite amount of pitches in your arm, realistically, and so I think that's why athletes understand Bitcoin a lot better than entertainers, because entertainers can just sort of, they get sucked into this whole narrative with NFTs and all these other scams and stuff like that. But I think athletes really understand, hey, I'm scarce. I can only play so long. My body's going to break down. So that's why I like Bitcoin. You see, a lot of these NFL players, especially. I don't think coaching's in my future. I'm a little bit too much of a maverick. I have a hard time fitting in with the sort of golf buddies and cigars crowd. I want to go race cars and go to Africa and, that's Africa over there. Take safari photos and go shark diving and do random stuff like that with my free time. And I like being a dad, So I don't think I would actually be more likely to come back as a knuckleballer than I would be as a coach.
I love that.
CJ, you have 2 girls, right?
2 girls and a boy. Yeah, we have three kids now, so it's an absolute debacle at the house.
Nice.
All right, so this is a loaded one. Dave from Spark. CJ, did you ever intentionally throw quote unquote purpose pitches?
I may or may not have. I would say that 50% of the people I hit, it was like, hey, shouldn't have been standing there.
Yeah. Okay, so let's see here. Buck Jones from Aspen, Colorado. Big fan of yours, CJ. Over your career, what has been the most common money mistake you have witnessed your teammates or other professionals in the league make?
Gambling. 100% gambling. Some of the people are good gamblers, and the ones that aren't just get obliterated. I've seen people lose $30,000 on a plane flight playing Texas High Limit. Texas Hold'em, and I had a teammate, the catcher, lost $8,000 to the pitcher an hour before the game when I was playing in Texas, and I was like, "You guys are degenerate cucks. This is terrible. Like this is why we lose, because you guys can't get your damn head in the game because you're sitting there trying to like jerk around with and it's stupid." So that's the biggest money mistake that anybody makes.
And that's a unfortunately we have to end the conversation, but that's a great way to end. That is absolutely not how to risk manage your crypto, how to risk manage anything in markets, Ferraris, anything that this guy's in. This is really good, man. Thank you. Thanks for making the time and just being transparent, accountable. That's what America should be. You're a shining example of that, man. Thank you.
Thanks a lot, CJ.
Thanks for the info, guys. I'll see you on Twitter.
Be well.
He's CJ Wilson. I got Simone smiling. Now I got to go deal with the Fed. Thanks for joining our real conversation.